Hey everybody, this is John Carter with SimplerOptions.com. Obviously a very crazy week this week with the stock market closed on Monday. It's now going to be closed on Tuesday. It's not completely clear when it's going to open up. Just to clarify, the last time that the stock market had an unscheduled closing was, of course, after 9/11. Prior to that, the last time it closed due to a weather interruption was in 1888. So this is obviously a big event. There's been a lot of flooding in New York. However, the question is now when the high tide, as I'm doing this, the high tide's receding. There have been rumors that the New York Stock Exchange has been flooded, but of course, it turns out that it was not flooded. So there's a lot of misinformation out there. Seems like a lot of it by CNN. Getting a little overly aggressive, but of course, the bottom line is this is unprecedented. It's not clear when the markets are going to open up. I can tell you what I've seen when a situation like this comes that's unexpected, okay? And the stock market having unscheduled closings is unexpected. Typically, when in doubt, people sell. You can see that the S&Ps, which are trading a little bit overnight, are down 1175. Don't know where things will ultimately open up when the stock market does resume. But I've never seen a situation where something unexpected happens and the market rallies. And by unexpected, I mean like not unexpected good news. I mean just unexpected. There's the market's very good at pricing things in, and if something comes up that it didn't expect, it just tends to sell off. When in doubt, sell off. And if we look at the 30-year bonds and the 10-year notes, you can see that they've been rallying during this time. Of course, they have not been closed, whereas the stock indexes have been closed. Okay, so in general, that's what I see going on. So the big question also is going to be, so we've got stocks like Baidu. Okay, Baidu released earnings today, but there's no trading on Baidu. So one thing that I'm going to be doing is just kind of keeping track of all the earnings reports for today and for Tuesday, and I am just going to trade the reactions whenever the market resumes trading. And mostly what I'm going to be looking at are negative reactions. And typically on a negative reaction, let's say Baidu, for whatever reason sells off, I'd give it the first 15 minutes of selling, and then from there, I'd look for it to stabilize and at a minimum trade sideways. So I'll be looking to sell put credit spreads after that first 15 minutes of trading, because the implied volatility is going to be high. People are going to be nervous, people are going to be scared, and any down moves are going to be wanting to pay a premium for anything on the put side. And that goes with the stock market too. You could do the same thing on the spiders. You could do the same thing selling puts, put credit spreads on the S&P futures, because that uncertainty is going to lead to selling for the first 15, 20, even 30 minutes, and then things will kind of start to stabilize and at a minimum trade sideways. Okay, so this is a big impact, and this will make things a little bit on the crazy side. So the markets that are trading, the volume is obviously very low. You can see here gold. Gold futures have been trading. They've just been very quiet. And the thing is, and what a lot of people don't realize, is that a lot of these correlated markets, a lot of people think like these correlated markets have a big impact on the S&Ps, but they're correlated. The S&Ps actually have a big impact on the correlated markets as well. And if the S&Ps aren't actively trading, and they're not, then right now they're not actively trading. There's a little bit of, the CME is letting them trade a little bit, but it's not going to let them trade during the regular session. Then the other markets are quiet as well. Okay, so it will be a little bit of a hurry up and wait. There's obviously nothing really to do right now. The liquidity is so low, and it's going to be interesting because there's a lot of things that come up at the end of the month that are important. Funds need to liquidate, funds need to put cash to work, and they just can't do it right now, and they've just got to sit on that. So, whatever day it is that the markets finally open up, there's going to be a lot of kind of pensive, tentative movement combined with a pent-up demand of selling and buying pressure of shares that need to get unloaded. So I would focus on, of course, the overall market itself, but really take a look at these earnings plays for exaggerated opportunities in selling premium. All right, hope that helps. You guys have a great night, and we'll see you at the next update.